Okay, here we are, guys. We're talking about the stock market. People in the stock market. I mean, I had a friend once. He said, holding a position for 3 days or more was long term for him. So I guess he's a day trader. But basically, the point of that is a lot of people are really not patient in the market. It is very hard to time the market. If you see the market's been up for like 4 days straight and you're like, oh man, it's gonna be down the next day, you could very easily be wrong. It could go up and up and up and up for like another 4 days straight and then have a sell-off. It's true that it always will have a sell-off, and it always will in the long run trend upward. This is history speaking. This has been true since America, right? I'm not a genius or anything. I'm just telling you, since America, since the stock markets have trended upward in the long run, right? Now, that being said, where is the real big money? And the point here is in being patient, picking a stock like a winning stock. Stock that has such good fundamentals because the company is growing so well, or the company is doing great, and investors are surely going to put their money in it. You want to pick a stock like that. Now, timing wise, that can be difficult. Timing wise, you might see a stock hitting a new high and you jump in, and the market's kind of tank a little bit so it doesn't break out, and you come down like 3% on your position, 4% on your position. But that's a point in which, instead of saying, oh man, I need to just be out of it because it's been like down for 2 weeks, where you might actually, depending on the signs and the charts and the volume, you might actually consider, or you should consider, being more patient and staying in the stock. So I've had multiple times where I pick a stock and I am perfectly dead on, and the next day or by the next week I'm up like 30% on the position. And I've had times where I pick a stock and I'm down like 5%, and it's getting in my worry zone, and I'm looking at it and I don't cut it, and then like 3 weeks later it's up like 25%. So there's a thing to be said about being patient in the market. If you are losing money on a position, that doesn't mean you need to cut it. If you purchased a position and you are now losing over 8% on the position, I would say. But anyway, the point here is, you can be down on a position and it doesn't mean the stock is no good. It means your timing is bad or the stock is no good, right? So if your timing is bad, usually you have to just give it some more time and be patient, which is hard for a lot of people, I know. And then you'll see the stock kind of retrace its lost steps, and voila, you'll start making profits, hopefully, right? If your selection is bad, that should show in a most likely not very obvious. Stocks are not ever very obvious, but you should start seeing more volume for sellers, right? You should see red days where volume is bigger, is larger than average, right? You should see red days that are more consistent than green days, as in, like, you used to have 3 green days and 2 red days. Now you have 3 red days and 2 green days, and the red days are stronger a little bit than the red days, and it's just a downtrend, really. But which is not the same as a sell-off, right? If you see like just a semi-big sell-off, usually this means the stock's going to go into a little bit of a correction, right? And so usually if I get into a big sell-off, maybe the next day I'll sell the stock, put my money into a different stock, and when the stock that had a big sell-off recovers, then I'll jump back in. And you might say, well, why don't you just keep your money in the stock and be patient, like you're saying? Well, when the stock does have a big sell-off, you can't always now be certain that it's going to actually recover, although most stocks do that are good selections. But the thing about it is, in the time that it's doing this little correction, you're gonna at least waste like 4 weeks. Your money could be benefiting you somewhere else for those 4 weeks. So I'm somewhat of an aggressive, not too aggressive though, somewhat of an active trader, but at the same time I'm very patient on my positions when I need to be. So if I pick a position, I will wait at most 13 weeks, right? So that gives it time to come to its next earnings cycle, which is very deterministic, right? So if it's a good stock and whatnot, and I just had poor timing, but I believe it's going to be wanted to show extreme strength by the next earnings cycle, I should see a large amount of profit between even where my poor timing was and where I purchased it to after the earnings, or a couple weeks even after the earnings, when the stock starts breaking out or moving again. So anyway, the whole point here is you really got to be patient sometimes. Now that's it's a balance, right? You can't be stubborn. You can't be like, okay, this stock I'm down 5% on it. I've been down 5% on it for 3 months now, and it's not making any progress at all. And then 14 weeks comes and it's still not making progress, and you're down 4% or something. If it's not really making any substantial progress anymore, you've probably selected a dud. Now there are a lot of dud stocks, like I selected about 3 months ago, or no, even 4 months ago. There's a stock called AM. It's performing very well in the oil industry as a company. Like their earnings and whatnot, fundamentals are better and better. They're doing better and better. But after being in that stock for like 5 weeks, I realized it's a dud. It's not moving when the market moves. It's not going up, and the whole oil industry is the stock. All the oil stocks are just duds right now, or they're all downtrending, or having a lot of difficulty gaining support. So that was a stock that I wasn't stubborn about holding on to. I was down like, okay, I lost maybe like $1,000 on it, but then I was glad to be out of it. I put my money into a stock that is performing well in a good sector, and bam, I made all that money back easily and more, right? So don't be stubborn, be patient. If you can somehow find the balance there, tell me, because that'll definitely help me as well. I know it's super hard to actually achieve. It's all about, playing the stock market is something where you can get better. It's like practicing, right? That's why I have 5 virtual accounts, where I practice strategies. I practice things, like where, okay, I'm a little more patient, or I give stocks, like, instead of cutting them a little earlier, I give them more room to grow. And it's you got to try to get better and better. You're playing the most serious game where you just throw your money at something, right? And people a lot of times they're just like, okay, I'm gonna buy Snapchat as soon as it IPOs, and it's gonna be great. It's gonna be fantastic. And then it goes up $5, and then goes down $5, and that stock has no reason to move except for hype, right? There's no growth, like on this. Maybe you think there's growth, and maybe there is a lot of growth potential, but like numbers wise, financial statement wise, it's not good. And that's what I mean. It's not like it's such a solid pick. This is that's like a gut pick, which can make you a ton of money. But point here is it's not really just a game, although it is a game. It is a game, but it's a serious game. So that's why I try to do my best. That's why I have 5 virtual accounts, 2 real accounts. I actually have more than 2 real accounts, but 2 real accounts that I use. I want to open maybe another virtual account, because just what the heck, to see where I can always do better. I can always try to achieve more percentage gains. Anyway, that's my suggestion to you guys. Open some virtual accounts and try to implement different ideologies and different strategies, and follow a rule set for each of them. Anyway, Peace out. I rambled too much. Hopefully, if you guys actually watch this to the end, that would be really appreciated. Peace.